Welcome to this episode of Next Exit. Today we've got Michael Vigario, CFO of North America at ACT Commodities. Michael, thanks for joining us.
Yeah, thanks so much, Dan. Appreciate it.
So before we kick off, it would be great to hear first about yourself and your career and how you made it to CFO.
Yeah, sure. So I think one thing I've tried to do is build my career at the intersection of finance, accounting, and maybe more importantly, high growth businesses. I started in public accounting at Deloitte, moved internally to Barclays. So as you can see, those are two very big names. But then I made the decision to jump into fintech, actually, with a personal lending company called Common Bond based here in New York, where we raised multiple VC rounds, securitizations. I mean, we joined when it was only 6 people working out of the founder's apartment. So really one of those classic stories. But really taking a leap of faith from Barclays, 140,000-ish people to 6 people, which was, in hindsight, a pretty crazy thing to do. But tasked there with building out the finance teams, the capital markets teams, making sure that we had controls in place, making sure our risk models worked, all of that, which is quite an experience. And then for the past 7+ years, almost 8 years now, I've been CFO of the Americas for ACT Group. ACT Group is over $3 billion in the Americas alone, environmental commodities, trading, and SaaS business. We have some digital climate solutions in addition to our environmental commodity solutions. And there I've led or co-led M&A transactions as they pertain to the North American or digital business. We've done a capital raise at over $1 billion valuation from a private equity fund. And of course, most importantly, built a world-class finance and operations team. Across all of this, my focus has just been on building strong control environments, enabling growth and investor confidence, and having a lot of fun while doing it and meeting some incredible people. So yeah, that's my background.
That's awesome. I really want to hear about building a world-class finance team, but more uniquely, probably for all our listeners and even people who have been on the podcast, you joined a 6-person startup, which probably most CFOs and people in finance haven't done. What was that like, going from big name, big 4 global banking names into a 6-person startup in someone's apartment?
Yeah, I think my favorite story to illustrate that was I showed up on the first day. And I said, okay, yeah, I'll ring this bell and we'll go up to the office, not realizing the office was an apartment. I had interviewed there, but I just didn't really think it all through, because these are things you just don't actually think people live at the office, right? Like you hear Google, you live at the office. No, they literally lived at the office. So I ring the bell, finally go upstairs, and they go to me, oh, where's your computer? It's like, I don't know, this is my first day, you guys didn't give me one yet. And they go, no, you bring your own computer still. We'll get to the point where we buy computers, but we haven't raised enough yet, so now you still bring your own. And I'm like, oh, okay. And this is in Brooklyn. I didn't live in Brooklyn, so I had to go all the way back home, get my computer, and come back. So talking about culture shock, I mean, I went from, screens everywhere, just a floor of 500 people, monitors all over the place, to where's your computer? Why didn't you bring your own? And so it was quite a wake-up call, but it was great. I mean, really getting your hands dirty, being able to wear different hats, these were just huge pluses that I've carried with me for the whole rest of my career. A basic understanding of marketing, of analytics, of, even risk models, and things that I, in all honesty, at Barclays, in more of a silo type of corporation, wouldn't have been able to develop.
Sure. So the idea was get Mike in, and then Mike leads the funding, and then you get funding and buy a computer.
Yeah, exactly. And then they stole all the Bitcoin from my computer once I logged onto the network.
Exactly. Oh, well, that's fantastic. So just touching on building out the world-class finance and operations team, if you tell our audience, if you had to go into a company and build a world-class finance function and operations from scratch, how would you do it? What would you focus on? And what order would you do it in?
Yeah, so I think for what I did both at Common Bond and at ACT Group was starting with an accounting professional. I think, the core of the business is keeping your numbers correct. You have to have your reporting in order. Every investor wants that. You're not capital raising without accurate numbers. And then the second is depending on how heavily you are on the operations side of the business. So at ACT, we were trade focused. So operations is incredibly important. So we started with an operations person as the second lead. And then next was FP&A. So you need to be able to look into the future. You need to create models. In the start, like I was the one creating all the models and making sure that we had that forward-looking vision so that I could focus on having an accounting professional who was really focused on control and numbers, and having an operations person who's really focused, like uber focused on just customer service and delivery. So that's how we built up the teams initially. I think this is important so you have control and visibility into the business, and you obviously need that customer service focus to make sure you settle trades. Otherwise, you're just not generating any money. And then the rest we kind of kept external. That way we can leverage some expertise and gain some efficiency, some economies of scale until we brought those slowly in-house. So we brought legal in-house. Previously, we had used an external legal firm. We brought credit and market risk in-house as we grew, and we had more exposure to credit and market risk. So these things came sort of secondary as they were specialists that were add-ons. And then, focusing on RevOps if you're in a SaaS business, but trade ops if you're in trading, and FinOps if you're in fintech. So kind of the different regions of that, but all essentially looking at your reporting and your infrastructure. But I think the key is also the people that you hire. So I always focused on curiosity and discipline. People who want to work hard and not afraid to roll up their sleeves and can help you put systems and processes in place ahead of when you may necessarily think you need them, because you need to be ready for demand to come your way. You need to make success essentially. But those are my focuses.
Yeah. So you said at both Common Bond and ACT, you essentially did the same thing. You did the same process in the same order. So those are two businesses of massively different scale. So would you say that applies to organizations of all scale?
I think it likely applies to all organizations of all scale. I think you might get into something slightly different if you're in an engineering type of company or in a more service-oriented type. But I think for us, these are really important. You need to, I think customer centricity is important in all businesses, and whether you're trade operations or your customer success or customer care, however you want to call that, I think those are just paramount to make sure that your product lands well with your customer base. And then the base of the businesses is get your numbers correct. So I think accounting will always be one of your absolutely key pillar financial hires.
Yeah. Your career has been in companies where their product and their service is more in the financial space, whether it be trading or otherwise. A lot of our listeners will be CFOs and finance teams, but the product and service of the company itself isn't necessarily a financial one. How do you do things differently, and how much of your time is spent with financial challenges because of the financial nature of the service that's being offered?
Yeah, so I think at Common Bond, a vast majority of my time is spent on that financial services part of things, because the underlying product, the loans, are so financially based. Lending is essentially a commoditized type of industry where you can go online and shop for a loan. So it's just so important to have all your calculations correct, especially when you're dealing with personal lending. There's a lot of rules and regulations around that. So a lot of my time is spent on that. In trading, especially in business trading, a little bit less so. The underlying product is the actual product itself that we're trading. And so it's more reporting on that and making sure that, we're hitting the right segments of the markets and so it's much more market focused and looking at who our customer base could be, what customer churn looks like, what product margins look like, to sort of cash plan and show expectations a little bit more. So my focus has changed a little bit less from the product itself and more to reporting on market conditions, which I think would probably resonate with non-financially focused companies more.
How would you say that your role differed or the nature of your day-to-day tasks differed in the VC world versus the private equity world?
Yeah, so Common Bond was VC backed. And so we focused a lot on our growth potential, so the market potential. We focused a lot on our cash burn because it was a cash burn type of business where you build it and they will come type of idea. We focused on unit economics and positioning for the next round, knowing that if you're in a cash burn position, that next round will have to come at some point. And so it was really obsessed about the product, including from the finance side of things. So really understanding the product from A to Z, understanding where we can fit in, understanding conversion rates, understanding all of these different things, and focusing on top line growth, customer growth, and product. Those are the three like holy trinity type of setup things that we focused on. Whereas the PE side has been a little bit different. It's been more about performance with metrics. So your cash conversion, your EBITDA, how far you are from your forecast, focuses more on spend discipline. So really looking into those types of things, not solely unit economics, but more business economics, even at an early stage. So at Common Bond, we built the investor reporting to win over loan purchasers and rating agencies. And it was focused on winning over that top line, that growth side of things, and less so about the EBITDA of the business. Of course, there was a focus on the EBITDA of the business and not overspending, but it was more creating this feel for customers and this growth in a segment that we thought had a lot of potential. Whereas at ACT, it's been more diligence focused, more reporting focused. So audit level rigor on all of our reports, setting a governance and compliance infrastructure in place, focusing on cash conversion, on client churn, on margin per activity or per product, and looking at what we should cut, what we should continue, and less so looking at what the full market opportunity is and seeing what we could achieve and where we are right now. So the mindsets differ, but the common thread is still credibility with investors and then a product/business market fit.
Is that credibility in terms of the detail that you present or the speed at which you can deliver information? Like they ask and you've got it ready.
I mean, that's always the trade-off and always the $1 million question. Do you want pretty much right numbers quickly or do you want right numbers slowly? And so you always try to hit a balance someplace in the middle where you put this is where your processes and your programs and your integrations from your CRM to your ACT CTRM for the trading infrastructure, and then ultimately to your ERP makes so much of a difference. Is the better the integration, the less manual touch points, and the more accurate your numbers are in a quicker way. But of course, knowing when you join a 6-person company, none of that exists. So it's more putting things together with the view to the future. So I think we started with, it takes me a little bit longer to get the numbers, but I'm going to get them, to ultimately, and Common Bond's a perfect example. At first, we were doing investor reporting monthly because we would get all of the reports on the underlying loans monthly, and we moved to a place where we could do it daily. And that was through integrations, through system build-outs, and then it opens up a whole new customer base for our loan purchasers, because a lot of the underlying funds that we're investing needed daily reporting to report their net asset values. So it also is a progression with the business and a movement with the business. Now, ACT is a much larger scale at this point. And so we move to get numbers as quickly as possible and as accurate as possible, knowing that there is some fluctuation in there. But this is a knife's edge balancing act.
Absolutely. It's very similar to the challenges we have at Cluster. And when we're rolling it out, it's you've got all these different personas. So you've got finance, you've got sales, you've got RevOps. On our side, you've got data engineering, you've got some pretty deep technology stuff going on. And how do you find working with on the trading side of things, the people on the technology side? Obviously, I'm sure they can build some incredible technology that moves at very low latency, but do they understand? To what extent do they understand and they're open to learning about the financial implications of certain things and having these reported in the numbers in line with what a CFO would expect?
Yeah, so that's actually a really good point and always a very difficult thing to find technologists that do understand the underlying financial implications of what they're building. I think at Common Bond, we had a great team and we worked with an external company there who really had some even ex-CPAs that were now technologists, now business analysts. And that's why I think that business analyst role is so important to get right, because the odds that you have a real technologist who understands all of these, and there's obviously no offense to technologists. I don't understand coding, so it's fine. We both have our lanes. But having that business analyst that is interested enough in the underlying product that can bridge that gap, it has been for me the game changer. And I really realized when I don't have that business analyst in between, I do struggle a bit to explain exactly what I want and how this can happen. Whereas with that strong business analyst in the middle, they're always thinking, oh, okay, this information is in this system and linked by this unique identifier, so we can grab it from here and we can see the change at this point. And no, we only need updates. We don't need to flow the full information every single time, and that will make our reload time lower. And they're thinking that the next 2, 3, 4 steps ahead. And that just is an absolute game changer to have a partner who can think ahead like that and fill in the blanks that I know I have as a finance professional. And I know in my reporting asks and things like that, I may not know what's around the corner. And I think it's really important to have those team members who do understand, or those partners, or they're external or internal, it doesn't matter, that do understand that.
Yeah. Absolutely. That they always say if you want to make a lot of money, it's really hard to be the best at one thing, but if you can be very good at both two things at the same time, there's always a gap in the market for that. And that's exactly what a great business analyst is, I think. So can you talk to the kind of exit in the broader sense of M&A, etc., in your career, and how how operating your incredible finance function has maximized those events?
Yeah, so I think if I look at Common Bond, it was a different type of setup. It was raising funds on the business, to grow conversion rates, to grow. It's a very capital intensive business when you're in lending in general. And so how do you balance not diluting your entire company, just giving away the whole company to raise capital, versus how you can grow the business. So you need capital to grow the business, but how do you do this? And so trying to raise debt capital. And so really a focus on, okay, what do we need? What can we measure? How can we ring fence risk? And how can we get a bank or some other alternative lender comfortable to give us debt? So that was really a heavy focus at Common Bond, was how can we build a portfolio that the world essentially is comfortable with? And the world being the old world, banking, capital markets, et cetera, team. And so there was a lot of focus on reporting, a lot of focus on that credit box. And so we ended up partnering with Macquarie, and we ended up partnering with Barclays, actually, funny enough, after I'd worked there. And so they were able to get across the line, and for us to not always be giving away equity, but now have some debt. Right, so we can keep a little bit of our own equity, and then go to the public securitization markets in order to raise capital. But that also involves investor reporting. So getting that investor reporting function sound enough to be able to access the public markets was, those are all the things we focused on, and that's really where it was important for us at Common Bond to have those good business analysts who could translate the investor reporting needs into what the tech team had to build. And so that was really exciting. And that was how we kept funding ourselves, is through these securitizations and just recycling capital. Otherwise, you run out kind of quick, and that's a tough game to play. At ACT, about a little under 4 years ago, we actually underwent a $1 billion valuation raise from a publicly traded private equity fund. And that was around the clock reconciliations, work, audit level rigor. I mean, making sure our numbers had perfect backups to all the underlying trades. And I mean, going back to years before we had a robust infrastructure. So it came to really that team's curiosity, that team's ability to get their hands dirty and really translate some data that wasn't perfect. In hindsight, I want these 25 columns of data. At the time, you may only have 15. So in hindsight, why didn't I capture all 25? But at the time, you realize you didn't even have access to them, or you didn't think of 3 of them. And so trying to marry up and get that information as best we could to create a full tying to the financial statement backup, essentially subledger of all our trade data, all our customer data, all of that, to go through the diligence. This was a full-time job. I mean, this was around the clock, a full-time job to get it together. And I think the lesson from both is building robust processes from the start with data integrity checks, with a team that really understands the intersection of data and business is just paramount. So to prevent you from firefighting at the wrong times, you don't really want to be firefighting when you're at the end of a deal. You'd rather have the data there and be negotiating terms or something like that, as opposed to being nervous about what you're presenting. So I think those data integrity checks and those robust processes and integrations are just so important from the onset.
Yeah, absolutely. You want to avoid anything bad happening.
Yeah, and some embarrassment.
Yeah. So speaking of which, what's the worst situation you've encountered during an exit event?
Yeah, I think the worst situation we encountered was that we had modeled out prepayment rates at Common Bond pre-securitization, and the prepayment rates ended up coming in higher just because competition increased in the market. And so as competition increased in the lending market, I mean, again, it's a commoditized type of product, and so anyone can go in, look online, see a new rate. If that rate is lower than their rate and it's lower by enough, then they have a call to action and they will just refinance their loans. And so you could end up getting a higher prepayment rate and therefore a lower tail return on your portfolio. So when it came in shorter than expected, we had to quickly pivot and figure out how can we put safeguards in place on the portfolio so that the investors still reach their target return and we didn't lose our shirts doing so. So rejiggering really at the last minute, putting a couple safeguards in place, changing the wording a little bit, changing the target returns for everybody, and seeing if we could still be oversubscribed on the securitization. It sounds relatively simple when I say it now, but at the time this was 11, 12, midnight, 1 a.m. You're trying to remodel everything, negotiate with everyone, get all the docs updated. Securitization docs, I don't know if you've ever seen them, but they're like about this much paper. Now I think they're more electronic, but maybe I'm dating myself, but they used to be a lot of paper. And so, yeah, I think that was one of the toughest situations we had to get through.
Yeah. Wow. There's always a much higher risk when everyone's reaching any kind of debt situation because it can cascade and go very wrong very fast.
Yeah.
So there are a lot of up and coming finance professionals out there with their eye on the private equity CFO role in their career. What's the number one thing that a budding CFO should focus on if they want to build their career towards being a PE CFO?
Yeah, so it would be great if there was one thing, but I'm just going to go with two, although two is still relatively simple. I think the two things I'd say is, and it's kind of been a little bit of a theme so far in this whole chat, is technical control and communication. Communication reporting, kind of pretty similar. I think without clean numbers and strong controls, you just can't get to that role because people just won't trust you. If you have to continuously go back and amend numbers or change some statistics, or you're presenting numbers that are just incorrect, that's simply not going to work. And if you don't have strong controls in place, you probably can't get to those numbers fast enough. So that's why I say technical control on the business is important. And then a deep understanding of the business. PE diligence is extensive, is thorough. There's a lot of questions. And if you don't really understand the business to its core, I think it's impossible to explain that. And so you won't be able to communicate it in a way that, PE funds aren't only looking at your one business. Like the PE fund behind ACT Group doesn't only look at ACT, it doesn't only look at environmental commodities, it looks at a whole breadth of different industries. And so being able to succinctly explain the business when the PE fund is looking at it once a month or once a quarter or whatever it may be is so important to get everyone on the same page so that the PE fund can act as a partner as opposed to someone that you're trying to explain everything to. Because you really need that partner in place so that you can make decisions, whether it's additional funding, whether it's an acquisition or whatever it may be. And so the ability to execute and communicate with confidence, I think, is what sets apart successful PE CFOs from unsuccessful ones.
Yeah. And do you look for that in people that you hire under you in your world-class finance and operations team?
Absolutely. I think one of my favorite questions, which is the simplest question in an interview, is explain what you do now. And you'd be surprised at how many people have trouble succinctly explaining what they do now. Anybody can do it in 100,000 words and not really understand what they do and just be going through the motions. But having someone who can actually explain why they do what they do, when they do it, how they do it is, I think that demonstrates your ability to communicate.
Yeah. Absolutely. Whenever I've been hiring someone who's recently out of university, they've always got the CV and say, I've got, my incredible grades at a world-leading university. And then I just kind of look at the modules and say, can you explain to me how, molecular whatever works, or this part of physics works? And they somehow got 100%, but can't really explain it.
Yeah, exactly. That to me shows that you don't have that full understanding, or you didn't have that curiosity. You just wanted to learn it from the book and then move on. So I think that's paramount. Yeah,
absolutely. So, Mike, you've had a great run of success at ACT. What does the future look like for the company and the market and yourself?
Yeah, I think the future is really bright and exciting. I think the environmental markets are continuing to scale rapidly. Carbon credits, renewable energy, plastic, recycled plastic, all these new and upcoming asset classes, or I call them asset classes, but products, are moving from these really small niche places to mainstream. You're seeing Amazon care about this, Oracle care about this, Google care about this. You're seeing big names, Microsoft, etc., care about all of these things and making a market for these products. You also see compliance-related products. So for ACT, I think that means continued growth in both trading and the SaaS-based climate solutions like carbon accounting. We also have a trade settlement platform, a position tracking. So looking ahead, I see these markets continue to grow and possibly converging. So converging between, we have this idea of compliance markets and the voluntary markets, which are more of these carbon credits and some of these renewable energy pieces. And I think there's already more demand for transparency. There's more demand for technology enablement. In ACT itself, our digital offerings are born out of our need for technological enablement and this need to have the straight through process. But I think with our global reach, our talented team, our PE backing, I think ACT is very well positioned to lead in this transition. And so I see a bright future for us. And I hope it keeps going that way.
Awesome. No doubt it will. But look, Mike, this has been absolutely fantastic. A huge amount of gems for any budding CFO out there. So thank you very much for sharing with the audience.
Yeah, great, Dan. I really appreciate you giving me some time and having this great conversation with me.
Awesome. Thank you, Mike.
Thanks.